Hey traders, Ryan from blockstocks.com. Here's a live trade video where you can watch over the shoulder as I take a trade from the Insider Finance platform. This morning, the market opened just a moment ago, and what popped up was this FUTU ticker in our unusual volume. And when I come down here and sort by heat score, we do see that FUTU Holdings is coming up as puts in multiple orders. So we're going to click on this to bring up the ticker research. Here is the ticker research for FUTU. Now, if you don't know what this ticker is, it's FUTU Holdings, and what it is an investment holding company engaged in offering digitized brokerage platforms. Now, there was some news here. You can see that Chinese regulators are saying that it's illegal for cross-chain brokerages to sell stocks across chains or countries. So we're getting a dip in the shares of this particular ticker. So I agree with the 100% bearish sentiment, and all the puts are coming in. Now, to sort this, I've got this again sorted by heat score. This is an algorithmic calculation of highest conviction. And we're seeing that we're getting a number of different expirations on November 12th, November 19th, and November 26th. And our strike prices is ranging from 35 to 45. Now, it's currently trading at 53. And the largest order coming in looks like it's at this middle one of $45. So institutional money believes that this particular ticker will drop from 53 to about 45 by November. So what we're going to do is we don't really want to take the trade for that long. We really just want to jump on the back of institutional smart money, ride this down in the first burst of momentum, exit before they knew we were even there, and pocket our profit. So let's look over here in our Thinkorswim platform to confirm that we agree with this trade. And yes, indeed, the market has caused this ticker to drop because of this regulation news. Let's now look at the trade sheet here. I'm going to close this. And we're looking down here at the put-call ratio. And so this is confirming that out of all of the options being traded on this ticker, we're getting more puts than calls, and therefore the put-call ratio is above 1.0. So that's good to know that the market sentiment for this ticker is confirmed as bearish. Now, as we saw, that they're taking a number of different expirations, but the highest volume appears to be at this November 19th. So we're going to open down the November 19th options chain, and we're seeing the highest volume at $45. So that's an out of the money strike price. And then you have the at the money of $50, and then you can choose any number of in the money options here. But the most volume is occurring at out of the money. So the safest trade, honestly, is something in the money. However, you can see here that they're quite expensive. So what I've done here is taken one small position with just one contract here at the $50 strike, which happens to be at the money in this options chain. Now, one thing that we can also do to determine where we might want to exit is determine the downward trading range. The way we do that is we take the market price here and subtract the implied volatility that's being priced into these options. So I'm going to bring over my calculator here, and let's calculate what our bottom trading range might be. So we'll take the current market price of 52.8, let's just say 52.8, and subtract the implied volatility priced into the November 19th options. We're looking at 13.8 minus 13.8. And we're getting a number somewhere around $39 or $40. So let's just look at the chart real quick to get an idea of where that lies in the price action. So $40 is down here, so a $10 drop from the low. And And so that's a reasonable drop. We do see some other indicators here saying that we're getting some reversion here with buyer exhaustion. No one wants to buy at this level. We're getting sellers down here. In the short term, the market dropped immediately. We're getting a little bit of a bounce, but I think in the long term, it is going to continue downwards. Let's pull back out at a larger time frame, such as the 1 hour, and see what's happening. So again, we are seeing we saw a small bounce, but we're getting another signal back down in the hourly. And I'm going to drop back out even to the 4 hour just to see what's happening here. So we had sort of an upward bounce prior to today, but now we're getting a MACD cross to the downside as well as buyer exhaustion here. So we're getting sellers, sellers, sellers. Now, one way to exit this trade would be to look at the stochastic RSI. Now, people are often very familiar with the regular RSI, which indicates above 70 would be overbought and below 30 would be oversold. The stochastic RSI is very similar, but it is more responsive to subtle movements. So, so what you can do to exit this trade is you can look when this starts to become oversold on lower time frames. So let's say, for example, that we are looking at, say, the 30-minute time frame. And let's say that we're seeing this downward signal saying, hey, the market thinks that this thing wants to move down, and we're getting a squeeze fire down, MACD is down, and the stochastic RSI is down. So for me, there's two things I might look for to exit this trade. Number one, I would use my sequence counter and exit at the 8th candle. I've done some other videos on this, but currently this training video on the sequence counter is contained in a private trading library. So I'll be releasing access to that private library as I complete the videos in that training library. Another thing that I could look at is the stochastic RSI. And as most indicators and oscillators are set up, as a short term versus a long term. And so when the short term stochastic RSI line drops below 20 on this, that would be a signal to me to exit this trade, because it's possible that we are going to be running out of sellers and some people might be trying to dip buy and scalp this trade. So I would be looking to exit this trade on maybe a short time frame such as the 30-minute or lower, maybe even the 15-minute. Let's see what it looks like. Maybe even the 15-minute. And as this stochastic RSI drops below 20, that might be a good place to exit this trade, to take a day trade. Now, if you held the trade longer, that'd be fine. I would just do your research. So I would drop out to the daily. And again, you'd be looking for signals that would indicate that you're bottoming out here. Now, you can see here that we're trading beyond the 2 standard deviation Bollinger Band. So we're actually trading into the third standard deviation Bollinger Band. So that is already bottoming out there. So it's not going to spend a lot of time right there outside of that Bollinger Band. So you want to make sure that you're watching these signals very carefully. As this starts to bottom out, we're running out of sellers. No more people don't want to sell at that level. So they're going to either, if they were short the position, then what they're going to do is close their position here. So they're going to get buying pressure right there. Not that they're wanting to buy this ticker because of the news is obviously negative sentiment, but they're buying to close short positions, which unfortunately creates a buying pressure, which causes us to bounce back up, probably to maybe the Keltner channel line or the mean line here. So that's just one way to trade this type of thing. I'm going to watch this ticker, and if I see some results here, either today or in the following days, I'll post another video or update to show you the results of this trade. Hey traders, this is a follow-up video adding on to my existing short position on FUTU. I ended up closing the position at a 20% take profit level, and it turned out that I had placed a trade on October 28th and set a good till cancel order to take profit at 20%, and indeed the order closed the following day, and it turned out that I captured the profit from about this level here to about this level here. Now, on our position, I'll show you this other picture here. I had purchased one option of the $50 strike, and when we go back here to the actual chart, we can see that the price did not actually reach 50, or even our calculation of the lower trading range down here. So this is just a really good example of how unpredictable it can be, but that we now have tools that can improve our chances and give us an edge. So the edge that I had here was that I could foresee a reversal and a downward move, and hitting some kind of resistance here. And as I had said just moments ago in the other video, that as short positions are closing their positions on here, that unfortunately it creates a buying pressure and causes a bounce back up. So you have to watch very carefully and closely if you're in a short position because of that kind of reversal based on closing short positions. So going back to my other picture here, just showing you the final profits in the trade was about 21%, and the trade was opened on the 28th and closed the following day. So it's a nice little profit to pocket in an overnight trade such as this. Thanks for watching. Watch out for some of my other videos. Happy trading.